So we are going to talk about how to reward your retirement with tax-free and tax-deferred investments. Alrighty, so my name is Jordan Tyner and I am the growth architect at Preferred Trust Company. What that means is I develop relationships between Preferred Trust Company and investment sponsors, as well as onboarding the clients that come from those investment sponsors to help them establish their self-directed IRAs.
So who am I? Quick blurb. It's weird talking about myself, but I guess that's the thing nowadays. My name is Victor Bell. I've done over $59 million, it's $59+ million in real estate transactions. I've done that in over 8 states, but I did that from Hawaii. I'm originally from Texas. And the bigger thing was about 4 years ago, we moved to California and I started looking at bigger multifamily properties because I've always invested in multifamily properties. And I knew that that was the way to go. So that kind of started me on this journey of starting my own real estate fund. It's a $50 million fund. We have about $10 million circled. That's all from retail investors. And my goal with that is to be able to help some of the everyday retail investors, like people who are listening to this, people who have self-directed IRAs or they have an IRA 401k, they're accredited and they want to roll that capital, that money that they have sitting into a self-directed IRA with the team here and start to invest, whether it's with me or whether it's in other asset classes. Just do that. I think it's valuable for you to do. All right. But that's a little bit about me and why I'm so passionate about what I'm doing and helping people. So again, I kind of went into why multifamily, because those two things for us is that multifamily, number one, is the easiest way to create wealth for someone. And here's why. And it kind of leads into the second thing, because we've all lived in a house. We've all lived in, whether you lived in a house, you lived in an apartment, you lived in a condo, a townhouse, we all have some understanding of that, especially if we're looking to create wealth. So we know real estate is one of the ways, or one of the main ways to create wealth, but that real estate's such a big word. Multifamily real estate, similar to houses. So, it's, like we all know what it is, right? We see them everywhere, but it's like one roof with 100 houses in them or 100 units in them. So in my mind, that's the simplest way for somebody to invest in a property and have a lot of residents / tenants paying in every month. So to me, that's the easiest way to create wealth. It's simple to understand. And second, that we believe that rents are going to continue to go up in this country, because not just rent, it's a term, it's called renters by choice. People who make a certain amount of money who have to rent, but it's now moved into a place where people are now renting by choice. Renting by necessity, I apologize, is people who don't make a lot of money that have to rent because they can't afford to buy. But you have wealthy people now, people who make good money, they're looking to rent. They want the amenities. And when I take a look at that across the United States, rents have almost doubled and tripled. And I think that's going to be something that continues on happening, which is why I think multifamily is best, especially when we're looking at any type of assets that we're going to invest in, especially real estate. So, am I going too fast?
You're good. You're good.
Okay, good. The 6 reasons why we like this investment. These are some of the investment priorities for us when we're looking at a deal. As we're investors, just like everyone else. If you have, a retirement account and you're saying, hey, how are we going to make sure that our retirement account is still there? That we're going to be able to gain some type of upside, whether it's cash flow moving into this, returns coming in, as well as be able to capitalize on it. These are the reasons what we look at when I'm looking at an investment opportunity, and you should look at that as an investor looking to use your retirement account, potentially to invest. Number one is capital preservation. I look at this and I'm like, hey, will these investments lose money? Right? That's the big thing. Warren Buffett says it. That's his number 1 rule. No, don't move money. Don't lose money. Number 2 rule, don't forget number 1. Everyone says this. So this is not a new concept about don't lose money, which is another, way to say capital preservation is preserve capital. Number 2 is cash flow. Yeah. So number 2 is cash flow. I think I have 6 reasons on there, but it's probably like 5, but there's more. But cash flow, every time we look at a deal, we're like, is this cash flowing? So if we invest money in this property, is there enough money coming out of it to pay the expenses and then also to pay the bills? And then also for us to get cash flow on the money that we invested. That's really the game that's being played that people like to look at. Again, different ways to do that. But this is the reason, some of the reasons that we look at when we look at multifamily investing. Long-term appreciation. at some point in the future, do we think the investment is going to grow? Is the property going to grow? And actually, if the property grows in value, when we resell or we refinance the property, we take money out. Will we have a gain in what we've actually invested in? Will our money grow? So that's something that we look at. Is that a possibility? It's a primary thing for us. And then the tax benefits. We need to be able to, which is why we're here today also, to be like, hey, do we get the tax write-offs for this, or are there any tax deferred benefits that we can take advantage of? And real estate, to me, has the most benefits for the everyday person, somebody that's not a Steve Jobs or a Jeff Bezos, who's going to create something that's massive, to go into make this big amount of money. When we have that money, we're everyday investors, we're always looking for ways to be able to offset those things. And what are the tax benefits? And I think multifamily real estate has those things. And I mentioned it earlier, scale. How do we get more, right? So do you want 10 houses, or do you want one property that has 10 units in it, 100 units, 200 units? That's the scale that we're looking for. So every time we're looking at an investment opportunity, we're saying, hey, first, are we going to lose money? Next, are we going to make money on the money that we actually invested? Is there an upside for what we're doing? And next, are there any tax benefits to doing that? Which is another way to, I don't want to say make money, but we don't lose the majority of the money that we have. And if you're already in an IRA 401k, you are still getting the benefits of your tax, for being in those type of vehicles. But there's other ways, and I'm sure Jordan and the team are going to go over the tax benefits and how they can actually be expanded on inside of there. And then there's scale, which is number 5. And for me, as a bonus, there's leverage. We don't go over it a lot, which is why I say 6. But we want to look at investment opportunities that we can also get good debt, which is the leverage piece. Will our $1 buy us $3 worth of an asset? And that's the way that we also look at a potential opportunity, which is this other reason that's not on here. I just wanted to leave off the debt piece, even though it is valuable. So let's treat that as a bonus. Does that make sense?
Mm-hmm.
Good. Am I like blazing through stuff so fast? Everyone's like, whoa. And some of this, guys, I appreciate it. Again, I'm not a huge slides guy. You don't want to come and sit through watching me read word for word off of a slide. So I don't have a ton of notes. This is something that I believe in and I do every day, but I will go through these one-on-one. And I think I just did that. So if you want to go back and read this, I think, Jordan, you're going to give everyone a copy of the slides, right?
Yes.
Okay. So if you guys, want to read this, you can, but these are some better definitions of, real estate provides, stable, predictable returns on investments, things like that. And I'll kind of briefly touch point on that because these slides are here. The cash flow piece, one of the biggest advantages of real estate, it can provide a steady stream of income through rental properties. Long-term appreciation, it can increase in value over time. And that's huge. I think a lot of people only take a look at this. Will we double or triple our money at any point? But there's so many more benefits to being able to invest in real estate through your IRA or your retirement account that people tend to miss. And I think it's valuable to point that out. And I'm sure you guys are going to go over that as well. Right. Tax benefits. And again, I'm not a tax person. You're always going to want to connect with somebody on your team, accountant, CPA, somebody who does your taxes, as well as the team here over at Preferred Trust. But they're going to go over the tax benefits and how that's going to affect you. Some things affect different people differently. And it's important for you to have a professional on your team that knows that, and they're going to be perfect to help you out with those things. And last but not least, we talk about scale. I mentioned it before. I'd rather have one roof with 100 tenants than one roof with one tenant, because if things don't go well, I'm kind of stuck. It's like buying a business that only has one predictable customer comes in every month, or you buy a business that has 100 predictable customers every month that are qualified. So that's the scale piece that we talked about. And I mentioned leverage. It's not on here, but that relates to debt, being able to get good debt and leverage that gets your dollar to actually buy more of an asset than it would by itself. So $1 for $3 is typically the way we look at it. And I'm breezing through this pretty quickly because I feel like it took long. So I definitely want people to get value from it. But I also don't want to spend a lot of time because the technical difficulties that I had on my side. So I apologize about that. I really appreciate you guys. And if you want to talk more, about whatever. I'm here for that. So, and last but not least, or not last but not least, but the reward here, look, so if you're looking to protect your environment and your savings to grow your wealth, converting that 401k or IRA into assets like real estate are an excellent strategy to do that. So today we're talking about real estate on this call, but I know there's a lot of other assets that we'll be going over with you guys today in the other piece here with Jordan and the team. So that's the big question, right? So anybody that is interested in those things, how to convert your IRA into real assets and reap the rewards, that tax-free growth, tax write-off, and get those benefits, and this is kind of common sense, but it's not always common practice, right? First off, everyone should find a very intelligent and education-friendly custodian and administrator who do specialize in the things that we're talking about today, which is the team here. There's a whole staff there. I personally went to the office. They're my team. If I have a question, definitely I'm going to always direct it over to them. And I'm always going to direct any of my friends or anybody that's interested in that, because they're the right people for your team. And that's who you want to be talking to in any situation. You don't want somebody who you can't get in contact with. And I don't think there's ever been a time that Jordan hasn't answered my call. Next, you want to, and again, this is something that they're going to help out with or have questions and get you all lined up for those things, is to be able to transfer or roll over funds from your existing retirement account into your new self-directed account. There's a process for that. I think they're going to go over that. And if they go over it briefly, great, naturally reach out to them. But this is a piece of how to be able to transfer, and without penalties. You need someone on your team to help you do that. It's not something you could just do on your own. Step 3, use those funds in your self-directed IRA, in your self-directed account, to invest in real estate assets or anything like, in any other real assets. So paper assets and things like that too. Is that right, Jordan?
Yes.
Okay. All right, good. So, again, I know that's a dummied down 3-step process, because I think in big blocks, which is why I talk so quickly. Everyone on my team hates it. They're like, slow down. So, but it's important to note, I always tell people, like, from the self-directed, it's important to note that there are rules and regulations that need to be paid attention to. That's why it's good to have somebody on the team that is a custodian or an administrator. So make sure to reach out to them. And everything that we're doing right now, they are a qualified custodian and administrator for that. Is that right?
Yes.
Just so everybody understands that you guys aren't just some fly-by-night company that just popped out of nowhere. What you guys are doing, you've been doing it for a long time, and you guys are the experts in this space. So
yeah,
this
definitely.
Yeah, this is a perfect time for people to get that information and ask questions, which is the big part of this. Yeah. So I want to say that was my last slide, so I can.
Brief overview of Preferred Trust Company. We are a licensed and regulated custodian. We are regulated by the NVFID, the Department of Labor, and the IRS. With that, we provide our customers above average customer service within our industry. For those services, we do charge a small fee for everything encompassed. We'll go over those fees in a little bit. And we're also very much invested in meeting your investment deadlines. With that, we know that any investment you make has a time crunch, and we want to make sure that everything is funded within a short period of time, so you get all of those payments from your investment. So we offer a couple different kinds of self-directed IRAs. Some are tax-deferred and some are tax-free. For the tax-deferred, we have our traditionals, our SEP IRAs, and our simple IRAs. The last two are more for small business owners, so that they can either join as their own, as just a single employer, or they can do it for their whole staff. And then we just have our regular traditional IRAs. For the tax-free, we have our Roth IRAs, and they all have their distinguished contribution maximums that are listed below. And we can go through those in a little bit later, so you know what exactly you can contribute to each of those accounts. So the second step is funding your self-directed IRA. You can do those a couple of ways. The first, which is the 401k rollover. Those typically come from previous employers. So say you work somewhere for 10 years and you're wanting to have it not just sit in your 401k, you can roll those funds over into a traditional IRA. Sometimes there is verbiage with current employers where you can roll over a portion of that, but 9 times out of 10, it is for those previous employers. You also have the option to transfer funds from another qualified account. So say you have an account at a TD Ameritrade or a Charles Schwab, but you want to take your funds out of the stock market, you can definitely do that by transferring either all of those funds or just a portion into a self-directed IRA aspect, where you can make those alternative investments and you can choose what you want to invest in. The third way, as I briefly mentioned in the previous slide, is you can make a contribution to your account. So typically for traditional and Roth accounts, it's a maximum of $6,500, and then it goes up a little bit more for the small business owners. And by making the contribution to your account, you can also be considered a tax write-off, or you can be used just to grow your wealth. If you don't have quite enough money when you transfer funds, you can make an additional contribution so you have more money to make as your investment. Step 3 would be choosing your investment. So in this case, we have Bell Capital marked. They are considered an alternative investment in this world. And you do that by completing what's called an investment authorization form. That form can be assisted with anybody in our investments department, and it'll be specified with Bell Capital's investment documents so that you only have to fill them out the one time. And from there, we'll be able to fund your investment. That brings us to step 4, which is when you receive the income from your self-directed IRA investment, either tax-free or tax sheltered, depending on what kind of account you have. So Victor briefly mentioned that there's a lot of different aspects on where you can invest with a self-directed IRA. The only things that aren't allowable or anything in that red line, which includes life insurance, arts, different antiques and gems, coins, metals, alcohol, and rugs. Everything else is pretty much what you choose. So like I mentioned, Bell Capital is considered a private industry alternative, which is that yellow line that goes straight up your screen. That also includes different LLCs, limited partnerships, C corporations, private lendings, private debt. And then you also have other sorts of real estate investments, such as tax liens, tax deeds, REITs. So you have so many different options of where you can go with your self-directed IRA. You really just have to do your own due diligence to see what would be the best option for you. And we're here to answer any questions. Where we can't give you tax advice or investment advice, we can definitely lead you to get more information on what would work best for your investment and your choice of expanding your portfolio. So everyone loves to know, what is this going to cost me? So unlike your typical Charles Schwab or TD Ameritrade, we don't make any money off the investments that you choose. We only make our money based off the fees that we charge to establish your account and to maintain your account. I'll briefly go over in our next slide what comes with your fees, but I'll go over the basic ones we could have to actually open your account. So with every account, there is a $50 establishment fee to get all the initial paperwork started. That includes opening your account, getting your transfer processed, and initiating your online access. That comes in that one-time $50 fee. We also have our annual establishment fee, or I'm sorry, our annual administration fee. And that's dependent upon the assets and the cash in your account. You can see there's a sliding scale starting at $300 and then does cap out down there at the bottom. So you'll never be paying more than that bottom number, but we will evaluate your account annually, and you will know when your fees are due, exactly what you're going to be charged. And then the only other fee that you will be charged is your investment fee of $200 when you make the investment. And that does all of your paperwork to get your investment funded, as well as all those investment documents signed and sealed. Other than that, we do have a minimum balance requirement. So you do have some cash sitting in your account. We would hate for you to invest all of your dollars into an investment and not have anything to fall back on. So we do have our minimum balance requirement, and that is $500. It's not listed on here, but I can definitely go over that with you more if you have any additional questions about our fees. So what's included with our full service under that administration fee? So we supply you and we file all of your annual tax documents to the IRS. We process any sort of contributions or distributions you may take. So if you want to add additional funds to your IRA, we will process that. Or if you want to take distributions from the income you receive, we'll do those as well. You get 24-hour access to an online portal where you can see all of your investments, any cash sitting here in your account. You can see all the transaction histories, and you can also e-sign different documents that you may need through your portal as well, so you don't have to physically print those out and sign them. You have access to get annual statement packages or monthly statement packages, so you can see everything that's going in and out of your account without having to log in if you don't choose to. And then you have our phone and email client support staff. So they're available Monday through Friday during hours of operation to answer any questions that you may have. They're really easy to get a hold of. They're great at answering your questions, and they're there to help you. And then we also have a lot of continuing education. Some of it are webinars like we're doing now. We do have a podcast that is released weekly. We have white papers and blogs that go out. You are continuously getting education, and that's also all emailed to you as well if you're signed up for our emails. The most important thing to know here is you have to do your due diligence, whether it's on us as an IRA custodian or it's on your investment sponsor. A self-directed IRA is exactly what it means. You get to select your investments, but that also means that you're taking on the responsibility of what is produced from those investments. So you have to do your due diligence on not only the investment sponsor, but the investment itself. You need to educate yourself on what you're actually giving your money to. I did mention that as a custodian, we don't give investment advice. What we will do is we will guide you through the process and make sure that your IRA is compliant through the guidelines of the IRS. We will always make sure that we have all the proper documentations to make sure that everything is handled per the guidelines of the IRS. So with that, also do your due diligence on us or any custodian if you don't choose to work with us. Make sure that they are a licensed custodian and make sure that they're handling your documents with the care that you would want them to be handled with. So is a self-directed IRA right for you? Well, only you can answer that question. But ask yourself this: you're paying taxes when you make investments with cash? Are you willing to pay more in those taxes? Or would you rather make an investment that's either tax deferred or tax-free through your self-directed IRA? Only you can make that choice. I know I did go through everything really fast, but if you do have any questions, my contact information is up above. I'm happy to answer any questions that you have either now, or if you have more in-depth questions, we can answer them over the phone or by email. You want to unmute Victor? See.
Sure.
All righty. So I know we have some time here. Did anybody have any questions that they wanted to have answered? Go ahead and you can put them in the chat.
Okay, I've got a question here from somebody. They're asking, how long does it take to transfer funds from my current retirement account to preferred trust company?
Yeah, so the initial paperwork only takes you about 10 minutes to complete with us. We'll then submit your paperwork within the same or the next business day to whatever custodian your funds are currently being held at. From there, it's really at the discretion of where your funds are being held. We've seen it take anywhere from a couple of weeks to a month or two, depending on if one, you're having your funds sent to us by check or wire. Wire is obviously a bit quicker since you don't have to wait for postage, but that does come with an additional charge to have those funds wired. So it really does depend on how quickly the custodian you're currently at gets that transfer processed.
Do you provide monthly statements?
We do. Those are something that you will have to request, and you'll request those monthly, but you do have the option of getting those statements.
And then we have another question. Do returns get paid to me or the account?
So if you're investing through an IRA, the funds and dividends that you receive from the investment will go back into the IRA to keep them in that tax sheltered environment. It looks like somebody else asked if they're allowed to have a joint account with their spouse. So no, an IRA stands for individual retirement account, meaning that it has to be just for you, and it does report to the IRS under your information. Somebody else asked, do I have to transfer all of my funds from one retirement account to the other? No, you can transfer a portion if you want. So you can keep your portfolio diversified, keep some in the stock market, move some over to us just to get a feel for what kind of investment this could possibly be for you. Somebody asked, why can't I use my Charles Schwab IRA? So Charles Schwab is a big box custodian. So they work with stocks, bonds, mutual funds. And that's why somebody like Preferred Trust exists, because we work in the alternative world. So we deal with anything outside of the stock market. Somebody else asked, can we remodel the rental property in the self-directed IRA? Yes, you can definitely hold rental properties in a self-directed IRA. But any remodel that is done on a property has to be done with qualified funds or funds within the IRA itself. Let's see. Victor, was there anything else you wanted to touch on? Any common questions you tend to have that you'd like to answer?
You know, one of the things somebody asked me this, and I know the answer to it. This was an individual investor. They
Mhm.
asked, could they partner with their IRA? And I wanted you to maybe discuss this because I'm sure you may deal with this quite a bit. Sometimes people were asking, could they partner with their IRA and on a real estate deal, similar to the person asked, could you, like if
Mhm.
you renovate it, and how that works. So, I would love to hear you guys kind of explain that, because I'm sure people listening, whether they're going to invest in real estate on their own, maybe they have money in an IRA. Could they partner with their IRA, do the renovations, and then have a portion of their ownership personally, and then, or somebody else, and
Yeah,
then
so it would have to be specifically documented in the contract that you have for the property. So say your IRA owns 50% of the home and the other 50% is owned by your own personal funds. It would just have to be written out that way. So, but any maintenance or anything paid towards that rental home would have to be split the same way that the ownership is split. So 50% of the renovations would have to come from cash and 50% would come from IRA funds. And it would have to be able to be proven to the IRS for auditing purposes. So everything would have to be very much documented.
good. Thank you.
Yeah, and somebody asked, does rental properties have to use a maintenance company? Not necessarily, but you won't be able to do any of the maintenance on your own. So it would have to be a person that's not in your immediate family or yourself. So so you could use like a smaller third-party maintenance person. It doesn't necessarily have to be a company. Let's see. What else? Someone asked, can I convert my traditional IRA into a Roth IRA? So definitely, some people like to take those traditional funds and convert them into a Roth, and you can definitely do that. We would ask that you transfer the account as it is now. So if you're currently holding a traditional, we ask that you transfer it over as a traditional, and we do the conversion once it's already here. There is a small fee that we charge to do that conversion because it does have to be reported to the IRS as such. But yes, we definitely are able to roll over or convert a traditional to a Roth IRA. Tracy asked, can we pick the qualified property manager company instead of picking someone else? Yes, so you can choose all of that. Jill asked, can I roll over from a current employer? So with current employers, you will have to ask your current employer if they have anything in there that states that they're able to roll over a portion of it. Most of the time you are not able to roll it over with a current employer. That's just something you'll have to check within those documents. And then Tracy asked, can we change property manager if they don't do it right? Yes, so you have the complete control of who you choose to manage your property. We'll have forms that you can fill out that'll indicate who it is currently. And then if you choose to go in a different direction, you'll just have to notify us so we have their information on file. Because any payments made to that property manager will also come out of the IRA. So we'll need their information in order to make those property management payments for you. Victor, can you tell everyone like what's the minimum investment amount for Bell Capital and how that works?
Yeah, definitely. So it's an accredited only fund. So any investors do need to be accredited, and we do verify from our side. The minimum investment is 100,000, but the average investor is investing roughly about 250 to 300,000. We have some bigger. So that's how that's done. And if anybody's interested in that, they're welcome to go to bell-capital.com, and they can go ahead and either book a call and schedule a call with myself or someone on our team, or they can go ahead and, get started, and then they get access to the deal room, and then they can take a look. But again, they have to be accredited. And I'm sure, and if people don't know what accredited is, that's make 200,000 a year, 300,000 with a combined or at a combined household, or they have $1 million net worth, excluding their primary residence.
Thanks for that.
Yeah.
Tracy, you asked how often can we inspect the rental house? I don't have an answer for that right this moment, but I can get that clarified for you and reach back out to you with that answer. I think it would definitely be based upon what your property manager would say. I'm sure they do it on an annual basis, but I will get a clear answer for you on that one. All right, Maddie, do you see any more questions for us?
Oh, I think that's it.
All right, Victor, do you have anything else? If not, I think I'm about done.
No, I think that was it. And that was awesome. Thanks for that. I mean, it was spot on point and great questions too. Those are really great questions. So I enjoy hearing people's questions about what they're asking about because it gives me a better understanding of who's listening and some and questions that they have and also how they're answered. So thanks for that.
Yeah, well, thank you everybody for joining us. It was great having you here. We will send an email out with all of this information, so you'll have a hard copy of this webinar.
Perfect.
All right, thank you, Victor.
Hey, thank you for having me. I really appreciate it, guys. I'll talk to you guys soon.
Bye.